Tell you what to do with your trades or investments, as I am not a financial advisor. Any and all content provided by me contains my own speculative opinion on the market. As such, this content should not be used to make trading or investment decisions. The market is extremely volatile, and the decisions you make should be based on your own due diligence. If you should make a trade or investment decision based off the speculative content that we provide, this disclaimer legally relinquishes me from any and all responsibility. Past market performance is not indicative of future market results. Trading in any market is extremely risky, and you should conduct your own research and analysis prior to making trading or investment decisions.
Well, welcome back once again to Blackfire TA. I hope everybody's day has been great. Mine hasn't been that great. I'm actually feeling very under the weather at the current moment in time. Food is not agreeing with my internal organs at the current moment in time, so I do feel a little bit shitty at the current moment, but we are here. We are going to power through it. And this voice may sound particularly familiar to a few friends of mine, as this is my ASMR voice. Maybe we should do some technical analysis with some calm and very weird sounding low vocal tones here today, but I don't think that I'm going to do that. Actually, I'm just going to be talking more on the quiet side. Again, I do feel like a hot bag of dog turds today, so I do apologize, but I am here. I am willing to power through this analysis today and try to make it a little better than yesterday. I guess I've been just feeling under the weather for the past few days, which goes to show the reasons why I haven't been so energetic within the live streams. But with that said, we are here. If you guys do enjoy the content, please hit that like button. Please hit that subscribe button. Please tick that little bell. We are on the road to 1,000 subscribers within the channel. Again, for any newcomers that are here, there's a reason why I specifically put that disclaimer at the beginning of my videos. I am not a financial advisor. None of this is financial advice. This YouTube channel is strictly for educational and entertainment purposes only. Again, as I try to use the YouTube platform as my own documenting forum, if you will, in a way that allows the community to interact with me in ways that allows me to learn, which is why I'm trying to expand the channel to accumulate more traders, especially traders that have vast experience, traders that can at least give their 2 cents on their opinion of my own analysis and so on and so forth. That's kind of the main drive to push for more members. So again, if you like the channel, like and subscribe, hit that little bell. There's content coming every day. I do have a couple of more instructional videos in the works in the current moment in time. Again, as I go through my own little schooling, I'm learning more and more and more, and you're going to see my charts changing more and more and more as time progresses. So let me adjust this real quick. So yeah, today I might poke around with the MACD indicator. I did a little bit of a refresher training. I've done training on the MACD indicator in the past. Just any of the training that I'm going through at the current moment in time is like retraining, revisiting specific topics, revisiting specific subjects and specific indicators, and specific trading strategies and so on and so forth. To solidify my own trading analysis. So I think that's where I'm going to go ahead and hit the button on that. We're going to go ahead and get started with this analysis here. We're going to go ahead and fly on into NASDAQ here. And what do we see? We saw new all-time highs once again in yesterday's daily candle closure. We actually got a confirmed pull into that 1.414 Fibonacci extension target right around the $14,800 region. We actually got a wick that wicked a little higher than that, but close enough is close enough. I do consider that as a target met. We got a little bit of a resistance at the current moment in time, and I'm going to go ahead and put that right along the 1.414. No consolidation quite yet. Does that mean consolidation is out of the question? No, I do not believe that consolidation is out of the question, but more to the point, what I want to really bring up is the stochastics here. Again, seeing a lot of that coiling action. Just because we got across to the downside does not necessarily mean the momentum is waning, that the momentum is dying off. That is not the case in my opinion. What it actually is the case is the fact that stochastics remains in the bullish critical zone, and that is more or less powerful in my opinion. Again, seeing the stochastics deep in the critical zone for such an extended period of time, alongside price action blasting through, printing new all-time highs, that's a show of power. Again, just because we have this fresh cross down, the exponential is a little bit negative here. That doesn't mean shit to me in the context of this overall trend right now. So I'm looking in the context of the overall trend. I do see a little bit of coiling action again with stochastics here. That tells me nothing as far as downside momentum. All it tells me is that this still has more possibilities to see more upside price action. And at the current moment in time, the 1.414 Fibonacci extension is the next target to see broken. If we do see the 1.414 broken on a daily candle closing basis, 2.272 is the next valid target, all the way at $16,800. Now that is a momentous, absolutely colossal style type of move to the upside. Obviously, I wouldn't be expecting it to happen overnight. Obviously, I'd be looking for ebbs and flows and momentum oscillators to cool down and higher lows and higher highs and so on and so forth. I would just be looking for trend continuation. As a result of that 1.414 breaking. Again, the $14,800 region is kind of the target. Seeing a little bit of a pullback. Again, I always mention this to traders. Give me 1 second. I'm really thinking that this water is going to help my stomach, but it hasn't helped all day. I've already crushed 2 liters. I always remind traders, new or experienced, to hit the brakes, pump the brakes a little bit every once in a while, because while we are seeing a very momentous, very powerful, in my opinion, move to new all-time highs, it does look like a parabolic run-up right now. We do have to expect some kind of pullback action along those major extension targets, and I learned a little bit more about extension targets, and it turns out that extension targets, setting up extension targets is not one of my issues. So we can see the 1.414 was met perfectly on yesterday's candle closure. Oh, excuse me. Please bear with me. My stomach really hurts. But that's the target. That's the target that we're looking to break. If we do break again above that region, I'm going to be looking for moves all the way back up to this region. Not back up to this region, to this region. New all-time highs around $16,800 for Nasdaq. Very, very nice. Very, very powerful. Nothing concerning in my opinion. Again, coming down to the RSI, that bullish uptrend continuation. Exponential is very powerful to the upside, very positively sloped. Finally breaching through the bottom side of the bullish control zone. Looking at just more and more evidence of, the bullish run to the upside here. Again, this long-term structure that we see from RSI here is still very valid. Yeah, we've had a couple of pokes through it, but this structure, I'm looking for touches, and we have a lot of touches on this uptrend structure. So as far as the bullish trend on a long-term scale, I'm not bullish whatsoever. Excuse me, I'm not bearish whatsoever. Going ahead over here, pulling up our moving averages here, just to prove another bullish point. Closing above all major moving averages. We're seeing that red 10 moving average, that simple, pulling real close to that price action here. So again, a pullback. Test the 1.272. Maybe this as support once again would not be out of the question. But if we see a break below this region, then I'm going to be looking for a specific, specific top call and a little bit more of a pullback, maybe to this prior low here at around 14,520. If we see a break below 14,520, that's going to be indicative of a new printed low on this asset, and I'd be looking for lower highs and lower lows. That'd be kind of my first warning shot fired as far as potential downtrends are considered. As far as Nasdaq is concerned, up. I'm still looking to the moon for this one. Probably the same thing for SPY here. Yeah, achieving more all-time highs yesterday. And this is what makes me believe I have my fibs in the wrong region. Yeah, I think I do. I think I do have my fibs in the wrong region. Give me 1 second. adjust this. Okay, that makes sense. So we did have a target meet, I think. Yeah, one spot 272 Fibonacci extension target has been met. We actually have a new ceiling of resistance right along that Fibonacci extension region right now. Same thing as NASDAQ though, nothing too bearish. Stochastic still in the critical zone. Yeah, we do have some waning momentum to the downside, but we're still in the bullish critical zone. The bulls still have control. There is no evidence of the bears taking control whatsoever on this asset. A little bit of raise a concern here with that double rejection of the bottom side of the bullish control zone. I'd have been more comfortable with seeing a breach into the bullish control zone. I would be a lot more comfortable with that type of read. However, we're still very close to the bullish control zone. We're above the 50 reads, so that leads me to believe that the bulls still have maintained control within this asset here. Still seeing that positively sloped exponential maintain support here. Again, new all-time highs. A little bit of a pullback as a result. Nothing too concerning. Looking at the MACD. There is a little bit of raise of concern. We do see waning momentum from a MACD perspective on the histogram as we see new all-time highs. That is a little bit concerning to be quite honest with you. That just tells me that upside momentum is starting to wane down a little bit. Maybe the bulls for SPY futures here are running out of steam just a little bit, but. Again, nothing too out of the ordinary for SPY futures right now. I still am looking for more all-time highs. We did meet the one spot 272, and especially if we break it on a daily candle closing basis, I will be looking for extensions all the way up to the one spot 414, right around $4,410, give or take a couple bucks. That would be my next target to the upside upon the confirmation break of the one spot 272. Now, on quite the opposite side, break of the red 10 simple. Do we consider this a major low? If I see continuation to new all-time highs, yes, I could consider this more or less of a major low. But right now, this is the prior low, and if we see this taken out, I'm going to be looking for backside targets of the red 10 simple, but more likely the red 10, and more importantly, this level here, the prior breakout point of 42.47 spot 50. Obviously, we've only tested that maybe one or two times, confirmed it as support. It wouldn't be out of the question to see a little bit of a pullback to test that region, maybe set a structural higher low before continuing onwards and upwards. Not out of the question whatsoever for this kind of asset. But again, closing above all major moving averages, seeing only slight evidence of waning momentum. Not convincing as far as major downside is concerned. I'm actually very convinced that this is gonna remain bullish until proven otherwise. We'll go ahead and move on to Dow Jones. See how that double top's playing out right now. Not too shabby. Actually bouncing off the red 10 simple here. Yeah, perfectly bouncing off that red 10 simple. Nothing outside of potential consolidation within this region to identify. Obviously, we don't have a low here within this region. We don't have a break of a critical level, especially the one extension level here. Pull back to the 382 Fibonacci retracement. I'd say that's close enough to consider that a test to the 382, and that works, and it did work, as we did see it get bought right back up. Now, what I want to see to be convinced of bullish continuation again is a break of the all-time high resistance at 34,825. Any kind of daily candle closure above that region, I'll be looking for extensions all the way up to the one spot 272, somewhere around the $35,200 region, give or take 10 or 20 bucks. Somewhere along that region is where I'd be looking for upside targets. Any break below the red 10 simple, I'm going to be using fib retracement levels along the way. I guess I could say, this prior low here, right around the spot 5 region, 34,200 would be my next target to the downside. Upon confirming a break of a moving average, that would be my next target. Now, if we take out this low, the bottom side of this box here, in my opinion, is going to be well within the ballpark of possibilities. Looking for another potential stab at that Cyan 89. Now, what's concerning is that top call, but we didn't see that bearish divergence really play all the way through. We already have 1-2 drives here. It wouldn't be out of the question to see a third drive at any point. Let's see, where could we see a third drive come from? Maybe this point here, but we need to see higher highs. right? We need to see new highs printing for that bearish divergence call to even show up. And we're well and far away from that. But for now, the same thing pretty much as yesterday applies. A break above this region, the 1.272 is my target. A break below the red 10 simple. Then I'm going to start playing with moving averages to the downside and Fibonacci retracements to the downside, obviously with the 0.5 being the first target and then the 618 being the next target. And look at that. The 618 actually is perfectly aligned with the green 55 moving average at the current moment in time. That actually plays out very nicely, seeing a potential pullback to that region. And that would be a region I would be looking for bounces along the way, obviously. But at the end of the day, again, a break to the downside, the bottom side of the box is going to be a big possibility, and obviously a break below that box, a close below the Cyan 89. My next target for the downside would be inside this box here, just below 33,200, give or take a couple bucks here. That's it for Dow Jones. I'm still looking for something to happen, for something to break. Outside of that, it's just been a lot of consolidation, a big consolidation range playing out for quite some time, setting not one, not two, not three, but 4 consecutive tops at the same resistance. So things are a little dire in my opinion for that resistance. That resistance is weak. But if it doesn't break, then I have to assume the downside is a possibility. So that's where I'll leave Dow Jones here. We'll move on to Dixie. We don't have that many requests tonight, so I do believe that this one will be a shorter stream here. I might throw in a couple of my own just to juice it up a little bit. But for now, continuation. Look at that shit. Continuation to that blue 377 moving average here. Now, again, this is the most important thing for this asset in the current moment is finally breaking above and confirming candle closures above that blue 377. If we get that condition met, I will be looking for extension to this resistance at the very least, right around the 92.93 region. But ultimately, a break above the blue 377, and I'll be looking for a test of the prior high here. Again, for the long-term structure, I need to see new freaking highs printed. I need to see a structural higher high. Like, we got this uptrend here, but this isn't a structural uptrend. Yeah, it's an uptrend. It's a tradable uptrend. That much is confirmed. That much is evident. But is it a macro, bullish uptrend? Fuck no. And nobody will convince me otherwise. I'm so sick of YouTubers telling me that this is a fucking bullish uptrend when we have no evidence of change of behavior. And a clear breakdown after hitting that blow off top all the way to fucking prior lows. I can't even fathom why people think this is massively bullish right now. It is not long-term bullish until we see a long-term change of behavior. And we do not have a long-term change of behavior at the very least until we take out the 93.25 prior high and start printing new structural highs within this overall structure here. Anything below that, any kind of rejection at the blue 377, sending price action back down, crushing through these support levels is just going to be another piece of evidence for long-term bearish downtrend continuation, as that would be another structural lower high in a sleuth of structural lower highs. This one being your blow off top over here, then your lower high 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 here, followed by this massive, colossal, crazy dump to the downside, right? Yes, then we got, higher highs, higher lows, higher highs, higher lows, and then we lost the whole fucking structure, which completely invalidates the structure, in my opinion. Again, I am not a financial advisor. This is not financial advice. This is my own speculative opinion on every asset that I look at. But when I look at something like this and people tell me it's massively bullish, I laugh. I shit you not, I laugh, because we have no evidence of a long-term uptrend structure until proven otherwise. And the proof otherwise is printing a structural higher high, taking out this high. At the very least, taking out the blue 377 first, taking out that prior all-time high, and continuing onwards and upwards, setting a series of structural highs and structural lows, higher highs and higher lows along the way. Until that happens, I am not convinced. I am not convinced of a long-term bullish uptrend. As it stands, this asset is still in a long-term bearish downtrend. Again, until proven otherwise. Right? Yes, there was hope. There was hope when we saw this, this creeping up here. And, this creeping up here Was not a convincing tell for me. This creeping up here, yeah, people may have gotten excited, but it was not a change of behavior. Why? Because this was the change of behavior point for this structure to be flipped from long-term downtrend to long-term uptrend. And this structure would have been needed to take out this high, 94. Yeah, we'll just call it 94.5, 94.05. Excuse me. We need to see this high taken out for it to be a change of behavior. That was denied, obviously meeting heavy resistance upon this region here, setting price action all the way back down, forcing all that price action lower. Yes, technically we have a higher low. Yes, we are technically in an uptrend. Yes, that much is true. But is a long-term bullish uptrend? No, it is not confirmed a long-term bullish uptrend until we see that structural higher high, until that region here is taken out. I'm not convinced. Now, is it possible? Yeah, absolutely. We do see momentum oscillators flashing a little bit of concern here with stochastics breaching back into the bullish control zone from the critical zone. I look at this as basically a rejection of that critical zone, forcing the stochastics to the downside. But what we do see is counter trend movements to the waning momentum here. So, maybe it's a show that the bears are losing a little bit of momentum. Maybe. For now, how I perceive it is that the bulls are losing a little bit of momentum. That much is evident. Yeah, we do see stochastics weaning to the downside while price action continues onward and upward. That is a little bit of concern for a potential structural lower high within this region. But as far as this overall structure is concerned, we do have higher highs, we do have higher lows. I have no reason not to think we don't see bullish continuation. We did see a little bit of that bearish divergence play through. Positively sloped exponential supported that price action, shot it right back up, back into the bullish control zone. Again, I want to see that blue 377 taken out, and I want to see RSI print new highs. That'll be enough to convince me, hey, maybe we see a test of that prior high. Maybe we actually see new highs being printed on the overall structure. And if we do get that, we're going to be talking a whole different ballpark. We're going to be talking about a whole different ball game scenario. I'm not going to get into that scenario because it is a little bit well and far away. I want to see confirmation before I start talking about major long-term potential targets to the upside. For now, that's kind of how I'm looking at Dixie. And again, any rejection of blue 377, taking out this low here, anything below 92.23, I'm going to be convinced that this is a lower high structure. Continuing bearish long-term downtrend continuation. So that's how I'm going to look at Dixie. We'll go ahead and move on to Mr. Bitcoin here. I need some water. I do apologize, guys. I am feeling again a little bit under the weather. I'm gross. Deal with it. It's my YouTube channel. I do what I want. Just be myself, right? All right, looking at Bitcoin. Majorly decreasing volume. That's kind of the very first thing that I noticed here is that we do have, a potential volume climax approaching soon. Soon, to be quite honest with you. Let's line this up perfectly. Let's actually zoom in here and get this lined up perfectly. So we have waning volume. Obviously, we have a triangle formation from the volume's perspective. Now, what does this tell me? What this specifically tells me is that something is likely on the way, right? Something is likely on the way. Again, when I say that, the direction is by no means implied. Direction of movement is not implied whatsoever. But what this tells me is that the volume, the participation is really starting to decline, especially within this region here. We do see a lot of declining volume here, which means we have a lot of less participation, which leads me to believe that a volume climax may be soon to come, right? A volume expansion, if that makes any sense. Typically, when you see a run like this on massive volume, and then you see a huge consolidation phase on decreasing volume here, a little bit more of a breakdown, decreasing volume. That's just a tell that participation within the market is starting to wane, and we could see some kind of climax, August 1st. As far as this trend line is telling me, it could be August 1st. Now, I actually want to reference a different chart here to see if that's, and see the volume climax on this one looks a lot different. Let's go to XBT. Yeah, this is similar, Similar structure here, except it's a little more crazy. But I do trade on Femex, so I use the Femex chart, a lot more often. But the same evidence, is provided here. We had a volume climax on that dump to the downside, right? We saw increasing volume on the move to the downside, and then decreasing volume along the way of this consolidation. That's just to tell that something's likely to come very soon. Again, is the direction implied? No, not at all. The direction is not implied, but we do have technical indicators that could give us an idea of where the direction could be, right? So we'll go ahead and cover the basics right now. What we got right now is another rejection of the red 10 symbol, yellow 21 converging alongside a rejection of this resistance. It is confirmed resistance once again. We did not see a break above that. We're seeing price action fall down towards that blue 377 once again. The pressure is down, in my opinion. The pressure is being put on the bulls. The bears are really starting to show their teeth a little bit, forcing this price action more and more to the downside. Yeah, got a higher high. Whoop-de-fucking-do. Still consolidation. It's still consolidation. Until convinced otherwise. And for right now, we're looking at another test of the blue 377, and we've stabbed this blue 377 I don't know how many freaking times. I mean, when did the bulls stop, right? When did the bulls say, all right, enough is enough, we got to let this price action come to the downside? That is very likely, in my opinion. Again, the same principle with horizontal support and resistances apply to moving averages as well. The more times a moving average is tested to the upside or to the downside, the weaker it inherently becomes. And the blue 377 has been stabbed freaking plenty of times, right? And we have evidence that the pressure is to the downside. Let's go ahead and look at the stochastics here. We got a fresh cross at the current moment in time. Any continuation to the downside, especially below that blue 377, is going to be a very big signal and a lower high printing on the stochastics alongside a rejection of the bullish control zone here. Look at the exponential. Yeah, it poked into it, but across directly and immediately back down through the bottom side is more or less rejection of the bullish control zone. And again, that'll just be another tell that the bears do not want the bulls to have control, and the bears want to force price action to the downside. Looking at the RSI, we have a break of that exponential here. Any further continuation to the downside, I'm going to be looking at another lower high here, another top call. Whether it gets bearish divergence or not, I'll leave that up to the caretaker RSI to identify for me. But for now, we have that fresh cross. Anything can happen within the day, right? We still have 19 hours in today's price action, but look at how tight. Look at how tight this price action is. Look at how tightly we are seeing price action ride that blue 377 moving average here, right? We saw a couple attempts to get some momentum to the upside. Failed. Up, fail. Every time bulls try to push that bad boy up, rejection. And that's all I'm seeing right now is price action rejection. What does that tell me? My bear goggles are on. Now, let's cover the major conditions that I'm looking at. Obviously, the blue 377 is a major condition, and what I would want to see upon a break of that blue 377 is continuation at a bare minimum through the bottom of the red box territory, below the $30,400 support region here. Again, perfectly aligned with this. Basically, last hope region. Again, that last hope region lines up. I think I got my fibs wrong. Do I have my fibs wrong? I think I have my fibs wrong. No. The blue 377 is the spot 886 Fibonacci retracement level, and that is, per what I'm learning, the 866 is kind of like, all right, this is the last, in my opinion, this is the last fucking hope, right? If we see a break below the 866, we likely see bots and algos flip. We saw the 0.972 hold a couple times, obviously, and the 1 even hold a couple of times. Seeing a couple of stabs through the bottom side of that box, and the box still remains relevant. But again, the more and more pressure I see to the downside, the more and more convinced that we see a break of that 30,400 region. And we all know what happens. We all know what's likely to happen if we see a breach of that bottom side. We likely see price action fall all the way down into this red box territory here. Again, this doesn't hold that much price action relevance. Hardly any at all. Maybe 5 or 6 days within this region is the only price action that exists historically. We've only seen price action between 22.5 and 24.3 for a few days. It's only ever been at that price for a few days. So the historical relevance of this box is lacking. But we do have it as a target. We do have something in this box as a target upon seeing this downside structure confirm. Again, we're waiting for confirmation. Now, MACD says a little bit of a different story, but we're starting to see that momentum wane. Again, we're starting to see that momentum wane, and we're starting to see lower highs on the MACD. More evidence of potential bearish movements here to come. Again, alongside that stochastics pointing to the downside, alongside a potential volume climax to approach somewhere between now and August 1st. RSI starting to creep further and further down, printing more lower highs, failing to gain any real bullish momentum to the upside. Now, obviously, the bearish momentum hasn't been that powerful either, but the bearish momentum has been enough to stop the bulls. It's been enough to stop the bulls from forcing price action back to the upside. Again, this is one of the reasons why I don't pay attention to news, because a lot of the news is saying, oh, Bitcoin's highs aren't in yet. Bitcoin's highs aren't in yet. Bitcoin's highs are fucking in right now. Technically, that's not opinion. That's fact. We have highs that are put in, and we have new lows on the chart being printed. Sorry, it kind of tells me that we could potentially be looking at a bearish market for the cryptocurrency sphere right now. And alongside Bitcoin, if Bitcoin starts to go dumpy bearish into the crypto abyss here, we likely see many of the altcoins mirror the same action as Bitcoin. Obviously, except for your one-off, one-two, unheard of type of coins that DeFi coins or New Age coins or whatever you want to call them. But a couple of those might survive. But as far as the 2018 shit coins, altcoin, Litecoin, Dogecoin, Ethereum, coins like that typically follow Bitcoin. So a lot of juicy stuff right now. Obviously, I'm not in any type of position. I'm playing it safe right now, and I'm waiting for a confirmation. I'm waiting for a signal to basically tell me, hey, this is ready to come to the downside. And that's basically how I'm looking at Bitcoin. If we do see a recovery back above 34, we'll just call it 34,550. Any closure back above that resistance line, then yeah, I have no reason not to see extension all the way back to this prior high, somewhere around 36,100, give or take a few bucks, and we close above there, then the green 55 is going to be my next target, and that would perfectly correlate with a pull into that death cross. Obviously, we see that death cross getting more and more divergence as the days go by, as every quintal, fuck, I can't even talk. We see the green 55 diverging further from the purple 200. With every tick, with every candle that opens and closes, we see it diverge further and further apart. So long as we are below the green 55 and the purple 200, the further and further those will continue to diverge. So we could see this pull into price action a little more, see a little bit of a pump up, and then fail. That's a possibility that I'm looking at. Am I looking at a full-blown recovery back to a bull market? Fuck no. I'm not in that mindset right now. I'm actually in the mindset that bears are putting on a lot of pressure here. A lot of pressure, especially after this fake out move here, sending us back down into this even tighter consolidation phase. So that's kind of how I'm looking at Bitcoin. That's kind of what I'm waiting for. Again, I'm waiting to pull that trigger. I'm waiting for the one confirmation. I want confirmation with specific indicators flashing certain things to confirm a position. So that's how I'm looking at Bitcoin. I think I only have one request today. It is AMC. It is one of the ones that I'm looking at, and boy oh boy, not looking healthy. Not looking healthy in my opinion. Not at all. Not at all. This is the box. This is the box of peace and prosperity, in my opinion. This is the box of peace and prosperity. Yes, we still remain within that box. Yes, there is still bullish hope. Yes. But that's hope. Those aren't technicals. Not at all. Here's what the technicals are telling me, right? MACD, gaining momentum, right? Look at the histogram, right? We got this bearish cross here. We got this bearish cross right here, right on this region here, and then MACD really started to follow the momentum to the bearish side, right? And we see the bearish momentum increasing as every single day passes, right? That is telling me that this has strength. This has momentum, right? The downside movements right now have momentum, and there's no signs, in my opinion, of it waning. Let's look at another bearish indicator. Stochastics diving deeper down, finally entering the bearish control zone. Exponential, obviously below the midpoint line, right? That's a significant read in my opinion. We'll go ahead and lay down a trend line on that midpoint here. Again, midpoint analysis holds a lot of weight, so I wanted to make sure that it stays relevant. And obviously, a clear break below that region tells me that the momentum is in the bearish hands right now. RSI, major momentum to the downside. Obviously, rejecting that exponential multiple times, right? Oh God, and this is again why I don't. I have to be transparent. I fucking hate the news. I can't stand the news. Oh my God, AMC apes. AMC's going to fucking blah, 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 blah. You know, that one guy on YouTube or on Facebook that what's that video? Someone had scissors hooked up to a coffee mug and they broke the coffee mug. I don't know. And he just simplifies anything and he's like, all right, that's my reaction today. Look at the fucking chart. Look at the chart. Just look at the chart. Just look at the fucking chart. Because the news lies to you all the time. AMC really, AMC doing this, AMC doing that, AMC doing theaters, AMC, that doesn't fucking matter. AMC opening theaters does not affect the shares, bro. Buyers and sellers affect the shares. If people decide to sell all of their shares, your 5 AMCs aren't going to appreciate. They're going to depreciate, right? People think that they have control of the market. That's fucking hilarious. Now, obviously, we've seen, the GameStop manipulation. Obviously, we've seen AMC manipulation, right? But all of those reads were easily identifiable on a chart. I didn't need any news to tell me. The only news that I got about any of the stocks that I'm looking at are word of mouth. A buddy of mine said, "Hey, maybe you should check out AMC," and then I said, "Okay." So here's what we're looking at for AMC. While I'm trying to be as serious as possible and try not to be too much of an asshole, because I have some people disagreeing with me about the whole news thing, because again, I don't pay attention to news, and I'm gonna do MMAT, and I'm gonna show a perfect example of why news doesn't fucking matter. So here, looking at AMC, right? We're finally touching down on the bottom side of that box of peace and prosperity. We have negative momentum across the board, declining volume here along the way, looking like we're getting ready for a volume climax. But right now, we do see volume increasing to the downside as price is being forced to the downside. Now, does this have to be the end of the world? No, it doesn't. I could be fucking wrong. Obviously, we could see some kind of weird higher low right here in conjunction with this low, and we could see price action lift onwards and upwards, except it wouldn't be a higher low. It would be more like a retest of the prior low. That's actually what we're looking at. 4507? What is this? Close. 49. Where's it open? 4203. So yeah, technically it's still a higher low. Technically still a higher low. We could see momentum pick back up. That would not be out of the question. See if we got any divergence here. We have 3 drives of divergence. Third drive actually played out. I have no reason not to think that it won't continue. Here's what I'm looking at. A break below 42.70 here, in my opinion, game over. I'll be looking at moving averages to be bouncy bounce areas along the way. Do I have Fibonacci retracements? I do? I don't know what the fuck this is. Oh, boom. Some could say that that's a little too much here. Maybe move it up to the bottom side. Yeah, all right, that works. That works. Okay, so a break below this region here, again, 42.71. I'm going to be looking at moving averages to the downside and Fibonacci retracement levels as potential targets for bouncy bounces, right? I would look for price action to break through, hit the 0.236, bounce back up, test the bottom side of the box of peace and prosperity as resistance, sending price action further down to the spot 382 Fibonacci extension. But again, you know, these are just bounce targets along the way. The major region that I'm going to be looking for is the somewhere around the 618 Fibonacci retracement level, somewhere around the 16.30 region. Why? Because there's a lot of space. There's no support, resistance, areas of historical relevance anywhere within this region, I don't think. Let's actually zoom. Oh, what do we have here? This would be a region. That would be a test. Close enough is close enough. It's close enough to the 238 or 236 to be considered close enough. Anything below that? Yes. Yes, let's get it marked out. So we do have a little bit of historical relevance. Maybe this is a box right here. Let's get it going. This is why I love doing this, because I was wrong. And I love being wrong because it teaches me a lesson. Let's go ahead and mark that out here. Again, as I gain more and more confidence, the more and more improved my own analysis will be. So we got a box there. We'll go ahead and delete that. Delete that. Maybe another little bit of a level here. Anything to the downside? Yeah, this could be it right here. That could be a level. Yeah. So we have our potential targets. Obviously, I would look for price action to fall into this box right here. Still not a good thing. Lower lows being printed on a structural basis here, and you know that would be more or less bearish in my opinion. You know, again with this parabolic run up, you know this region here has no significant support and resistance, and the support and resistance that I did lay out really don't have too much historical relevance either. I mean, we saw a little bit of a ceiling resistance within this region here, and then this region here. So you know, a couple of touch points, but nothing too major. So you know. What is the strength? What is the strength? What is the relevance? What is the historical strength of that resistance, or excuse me, support going to be? Only time will tell. But again, momentum to the downside is there. All the evidence is pointing to the downside now. If we remain within this box, I have no reason not to think that we can't consolidate for a little while. And obviously, a break above the top side resistance here, the all-time high. 1.272 Fibonacci extension target is about $160, $1.60 spot 30, give or take. A couple bucks, something like that, as I get this free money. But yeah, that's AMC. I'm actually geared a little bit more to the downside, especially with that second consecutive closure below the L21 moving average here. Obviously looking for a potential target of the green 55 as a result, but if we don't see that met, we see this hold, maybe we see some consolidation here, maybe see a little bit of a bullish reset. That would actually be fucking beautiful, as that would potentially open up a beautiful opportunity for myself to put on a position. I actually had a position I think about a week and a half ago, a soft position, nothing too major, thinking that we were going to see that ceiling and resistance break, but obviously we haven't seen that. We've actually seen some pretty significant decline, a 10% decline today. Let's go ahead and measure from top to bottom how much we've lost on this asset right now. Yeah, down 25% for AMC. You know, that's a pretty significant move. Do we see a bounce? Do we see consolidation? That's a very, very likely possibility. But again, the way the momentum is set up right now, everything's pointing to the fucking downside. Let's look at the shorter term time frames. Yeah, down, down, down. Hourly. Bearish control. Bi-hourly. Bearish control. 3 hour. Bearish control. No cross up. No cross up. 12 hour, bearish as fuck. 24 hour, bearish as fuck. 2 day, fresh cross to the downside. Rejection of the bullish control zone. Breach through the bullish control zone. 3 day, top break of the exponential. Consolidation and rejection of the bullish control zone. very, very strong waning of bullish momentum. Weekly, top. To be fair, from a weekly perspective, we could print a higher low. So a pullback all the way to the bottom side of it, all the way to the weekly green 55 could prove long-term bullish. As far as long-term is concerned, there's nothing, in my opinion, inherently wrong with this asset, so long as we see weekly closures above what? Let's look. $10. Weekly closures above $10 keeps this thing long-term bullish, in my opinion. And that's not to say we can't see some major massive pullbacks, but the technical indicators are there, and the technical indicators, again, from the chart that I do trade, the daily, are telling me, hey, this thing actually has a lot more room to go to the downside. So that's AMC. There was a beautiful heated. Well, it wasn't heated. Again, any kind of debate is open in the channel. That's what the channel is about: to debate, to challenge each other, to have an open mind, and again challenge each other to obtain a different perspective of the market. Obviously, I think I need a little more convincing as far as news is concerned. Maybe because I don't have any luck with news. Maybe because it's how I learned what news actually is. And I'll give you guys a little bit of a brief lowdown of how I view news here. So, Bitcoin, right? Bitcoin had news. Let's go back to Bitcoin real quick. Bitcoin had news. Something about China, banning Bitcoin for the, 57th time. 58th time, 69th time, beautiful number, 420th time, I don't know how many times fucking China banned and unbanned cryptocurrency, because when they do it, it doesn't really affect cryptocurrency anymore. Cryptocurrency doesn't give a shit about China. It's pretty fucking hilarious. I heard the news here on the 4th of July. Look at this. Got a little bit of a red candle, right? Ooh, that's the wrong one, buddy. Bitcoin lost 4.7% when the news came out that China banned Bitcoin cryptocurrencies again. Big whoop, right? Let's go to MMAT, right? And this is the discussion, right? Technicals didn't tell me. I'm not calling anybody out. Again, this is just open for discussion. This is an opportunity for me to voice my perspective, hopefully in a non-offensive way, to those who challenge my perspective, which is what I want. I want you to challenge my perspective because that's how I learn. But I'm still not convinced of the news, the whole news thing, right? And yeah, news didn't tell you that MMAT was going to dump half, right? 50-60%. You're right. News didn't tell you that. But for a goddamn fact, for a true motherfucking fact, the technicals definitely told you. Definitely told you on the first red day. On the first red day. On the very first red day, it told you. I'm going to show you. Right? Here's your first red day. Well, first off, here's a high, right? And this is the price action leading up to that dump, right? Here's a high. Look at the stochastics, look at the RSI. Now the RSI didn't quite get this as good as the stochastics in my opinion, but the stochastics gave you this high call, right? This little bit of a bloop, like peek up through. That's a high to me. That is a high. That is a top. A breach up, a nice little point dump. That's a top, right? That is a top to me. Here's your first little call right in this region, right? And then bearish divergence. That was before it even dumped. It highlighted bearish. Well, it didn't highlight. You kind of have to know how to identify divergence without the caretaker RSI. And on stochastics, I'm actually a lot better I can't even talk. At identifying bearish divergence. Now, again, the first red day was your tell. The very first red day. You should have, again, not financial advice, but you should have shorted on the first red day. Why? Bearish engulfing candlestick. That is bearish indicator number 1. Bearish indicator number 2. Rejection of the bullish control zone. Swift and decisive cross back into the bullish control zone. Bearish indicator number 2. Bearish indicator number 3. Break of the RSI exponential, forcing the RSI exponential back to a negative slope swiftly. Big move, right? Big reversal on the first red day. Huge, colossal. There's number 3. Number 4, massive volume. There's 4. Rejection of the all-time high resistance. There's 5. Gap down, continuation on the second red day. If you're a confirmation trader, that's 6. The technical analysis most definitely told you, good sir, that your shit was finna dump and dump hard. It told you. It definitely told you. I don't wanna piss on anybody's cornflakes or anything, but I didn't hear any news about Torchlight or MMAT. I actually didn't even know it was MMAT until someone had to tell me because I couldn't find it on fucking TradingView. One day I was trading friggin' Torchlight, and then the second day, Torchlight's a red blob on my freaking screen, and I'm like, what the hell's going on? I go into the chat, and someone's like, oh yeah, by the way, they're MMAT now. They did some blah, blah, blah. Did that matter? Not to me, because the technicals already told me. The technicals told me way before any news came out that this was going to dump. Technicals are faster, more reliable, and more truthful. When you hear news, you're not number one, you're not the first person to hear it at all. Millions hear it before you do. And it's very likely that a move has already played as a result of that news being released prior to you hearing it. Number 2, the news has to go through a lot of filters, which means news can be swayed one way or the other. That's the media. If you trust the media in any way, shape, or form, as an American citizen, you're probably doing something wrong. Nobody should be trusted in no media. What? Media is not our friends. They're not here to give us clear, concise, and decisive information. They're here to fucking confuse us, piss us off, not make us happy. So it goes through a lot of filters, right, before it goes into a beautiful little news article. And by the time that news article comes out, you're the 19,485,000th person to hear it, right? 20 million other people have already seen and made decisions based off of that news before you could do a thing. And that's guaranteed. You're never the first person to hear news. And if you are, you have illegal insider information. Congratulations, you're a dirtbag. Sorry, not sorry. That's why I don't follow news. It's not reliable. It doesn't give you gains. Now, obviously, there are black swans, right? Elon Musk pumping Dogecoin is a black swan event, okay? That's black swan. You can't do anything about that. That kind of stuff happens every once in a while. But if you're basing all your positions or doing all your research via the news, I think you're gonna lose more often than not, unless you're using technical indicators to confirm what you hear. And again, by the time you go to your technical indicators, you're probably already seeing the results of that news coming out and people making reactions based off of that news. So that's kind of my argument. That's what I learned about the news. That's why I don't trade it. I actually refuse to trade news at all. I don't do the whole buy the rumor and sell the news thing. No, I buy the breakout and sell the top via the technical indicators that are provided to me through TradingView. And it works. And here's a perfect example of how it worked. On the very first red day, you could have easily just shorted. Just, oh shit, that's reversal. You gotta you got a bearish engulfing candlestick on MMAT on the very first red day after this parabolic blow off top, with a lot of evidence showing you that there was going to be no bullish continuation. Again, Fibonacci. Well, there's reason number 7 for the pullback. Fibonacci extension target rejected. Right? It didn't extend. It didn't break through. It rejected. So, you got like 7 pieces of evidence, and I'm sure I could find many, many more pieces of evidence from the first red day that could have told you as a technical trader that, hey, it's probably time to pull out. Maybe I shouldn't hold on to this. Maybe I should manage my risk and save myself from losing 50% of my gains, depending on where you bought, right? That's what that's what technical analysis is there for. That's the whole purpose of risk and position management. Paying attention to your indicators, not being afraid to make a decision, not being afraid of missing out. All of those emotional based things that are behind the news and that are behind poor trading decisions are the result of people losing money. I'm telling you guys, the very first red day, there was so much evidence that told you get out. It's disgusting. I got out of Torchlight never because fucking Robinhood didn't even let me get in. But I promise you, if I was able to short this, I'd have shorted the piss out of that because very first red day told you, hey, it's done. This is done for the foreseeable future. And now we're seeing continuation. A break below the Cyan 89 tells me we got a lot more to go to the downside. Expanding. Bearish momentum on the MACD, very sharp to the downside. Stochastics deep in the bearish critical zone, printing new lows. Whew. A lot of bearish evidence, man. I love the debates. I might sound like a cocky dumbass, up here in this technical analysis stream, but it's not cockiness, man. It's confidence. When you trade technical analysis, anybody watching this, if you trade technical analysis, it's about confidence and not using emotions, right? Technical analysis is something that you can learn, generally in 6 to 12 months, right? But putting all the pieces together emotionally to make the right decisions at the right times is the hard part. Obviously, I still have struggles with that. Every trader has struggles, with that. It's taken me a lot longer to get along the way, but at the end of the day, I still know how to recognize, hey, that's an easy decision. Get out or short, and that's Torchlight, and that's the reason why I don't pay attention to news, because the news doesn't help me win. The technicals do. And I think that's where I'm going to wrap it up, everybody. I do have a viewer. Thank you for coming through. If you liked the video, please like, please subscribe, please tick that little bell. Come join the channel. The more people that we have, the more merrier. Again, it gives me an opportunity to openly discuss. That's what gets me going, is I love debating with people. I don't have to be right. I don't have to be wrong. It's just the fact that I get to have intelligent cognitive conversations with someone that doesn't have their own head stuck up their ass is beautiful. And the conversations that we had in the Blackfire technical analysis group page today, I love that shit. It literally just, it gets my heart going, right? It gets me pumped up like, holy shit, I'm actually talking to people about things that I enjoy and they enjoy, and we can have intelligent conversations about those things and learn and craft and build better trades, find better positions, learn more, get better. That's how you get rich at the end of the day. Keep grinding, keep studying, keep pushing, strive not to, fail, and don't let your emotions get in the way. Obviously, there's a whole bunch of other things that you have to do, but you get the gist. I enjoy the shit out of talking to people, which is, another reason why I'm trying to get more people. The chat has actually been pretty dead. I didn't want to come out and really say it, too much, but that chat is dead as fuck. I don't have any major conversations happening between a whole bunch of people. I got 1, 2, maybe 3 people that chime in and enter in the conversation, and that is disheartening. So, for those that do jump into the technical analysis chat and basically throw out the studies and throw out the news and throw out the IPOs and throw out everything they could possibly throw out, if you can get anybody that's interested in trading into that technical analysis group chat, that would be phenomenal. I so badly just want to open that chat one day and see like 30 people just chatting it up, right? Just throwing out indicators, talking technical analysis, talking market analysis, anything market related goes. I so badly want that in that group chat. So again, if you know anybody that wants to be a part of that, we have startup packages, we have a YouTube channel, we have an Instagram page, we have a Twitter handle, we have a whole bunch of stuff. At Fire Analysis is our Twitter handle. I don't remember Instagram. Blackfire Technical Analysis on YouTube. Link is in the description below. And Blackfire Technical Analysis on Facebook. Get some people. Bring some people in. I'm actively every day trying to just asking people at gas stations, hey, you want to join? And hell, we just went to North Carolina. I asked her friggin' parents to just create a YouTube account and hit the subscribe button just to support the channel and support us as a group. So again, just try to find some people. If you got anybody that you want to bring in, man, I don't even care if you think they're assholes. Bring them in. If they want to talk TA, they want to talk market analysis, bring them on in. And I think that's where I'm going to wrap it up, guys. It's been about an hour. Thank you for coming through. Thank you for watching the video. Again, hit that like button, hit that subscribe button, leave a comment if you have anything to leave. Hit the dislike button. I don't care. Anything helps. And until next time, guys, thank you for being here. Stay safe.